Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So in the gold market we now stand at the decisive moment. It's all preliminary steps that we discussed in the previous week mostly have been completed rather accurately. We even have got a few trading steps that we discussed in the previous week. And currently market stands at the point where we should get either downside, starting with downside continuation that potentially might become the extension of this leg. That's actually what we're watching for, and potentially we should get some target of this A, B, C, top, D pattern, so at least it will be previous lows. But hopefully, if this scenario will start to form, we will get some OP even back to the 1650 target. So that's what potentially we are watching for. And currently, mostly we should keep an eye on what will happen on intraday charts and when this downward action will be triggered. Conversely, if the construction that you will see on the hourly chart a bit later in this video will fail, we should be ready for a stronger upward action. So at least to the 1853, but potentially it might be something stronger. But based in this case, it will be the result of some external driving factors. For example, Fed meeting or European Central Bank meeting, although Fed is more probable. So it will be some significant impact from the outside. So it will be not just technical reason for that, because technically market should fall to the downside. And only some significant factor could change the situation, could change the sentiment of the investors. On a daily chart, right, that the resistance we already talked about is this market shows good, healthy response to the level that we have specified, forming kind of the evening star pattern or something of that sort. Mostly the minimum target of this pattern already is completed. It's just because market, as you can see, has shown downside action of the same length as the pattern stands. So this is minimum target of this pattern. Now we need to see what will happen next. On the 4 time frame chart, take a look. Drop here has happened precisely at the support that we have specified as well, 1793.18 even. So it was a great retest of the confidence. For this upward bounce today, guys, we have to keep an eye on the grabber. Appearing on the grabber increase the chances on success of our reversal pattern. So in this case, grabber suggests the taking out of the loss, and that might be direct A, B, C, D downside continuation, starting of some big downside action. In general, if you see the overall situation on the markets, especially on the stock, on the crude oil, as we said today in today's video on the Forex market is frightened. So they're scaring of the more aggressive action or statement from the Fed. And that makes a pressure on the stocks as well. So the gold market will not be an exception. It's also in the case of some more aggressive hints from the Jerome Powell, it really could trigger stronger downside action. And currently, the background actually is ready for that. The last word will be on fundamental drivers, in particular statement that we will get. So from technical point of view, as I said, on the hourly chart we are watching for a large head and shoulders pattern. It's already discussed many times. So it's left shoulder head. Here we talked about the anticipation of this pattern, possible taking the short position based on the minor head and shoulders on top. So those of you who did this, probably now could think about what to do next, or maybe you already have booked the profit. Currently, we come to second major chance to do this because actually, as you can see, market right now stands harmonic area to the left arm. It's where top of the right arm might be formed. That's the reason why I'm called to keep an eye on the grabber. Let's take a look. The grabber will be formed there. It might be the starting point. Why I also talk about the grabber here, just because take a look at on the hourly chart. If you calculate the extension, actually the OP and potential 3 drive, Gartner's T+2 pattern stands slightly higher, the 1825 stands target. So theoretically, this shoulder might be a bit higher than this one. But appearing of the grabber right at the resistance 1890 and the harmonic relation with these shoulders could give enough confidence that indeed market could start downward action right from here. Because Gartley stipulates, so it's not necessary it should be AB equals CD. The pattern right from here is also Gartley stipulates. So it probably will be COP here. We could actually check this out. I suspect that this is will be the COP. Right, you can see that here's the COP agreement with this level. So theoretically, that's the point where you could consider taking a short position. Initially, maybe for some case, you could hide your stop above the 1826, 1827, just for some case, if somehow market still will show this upward action. But technically, I suspect that would be enough to hide stops just above this area, especially if grabber would be confirmed and formed on the fall time frame chart. So that will be the background for a short entry based on this pattern. And now, after that, we could just wait and do nothing else, actually, because all that we could do, we have done. And the last word, as I said, will be from the Fed statement. And if it will be something new will be announced, that could trigger market to the downside. This will be the last part in the puzzle, because from a technical point of view, all things that we could do, we have done. So, and from that reason, of course, currently we are not considering taking the long position, because currently the reasons for rally might be again only from the fundamental drivers. And this will be some kind of the gambling, because from the technical point of view, we do not have any bullish background currently. So that's all that we have on the gold. Make your decision whether you intend to trade this stop or not, and let's see what will happen on the Fed.